Welcome to all of you, Shiksha 360. And today, basically, we have to discuss the chapter number 12, part third, that is banker customer relationship. Clear? And this session, it is very, very important, basically, for the examination point of view. Clear? Part third. Clear? As basically, we have already discussed part one and part two. Part one and part two, basically, we have discussed regarding the KYC AML. Clear? And this topic, basically, that is basically there is some terminologies. Clear? There are some specific terminologies, basically, in this session. That is very, very important, and definitely you will get 1 mark question. Clear? So overall 2 to 3 marks question basically you will get from this chapter. Clear? So let's start our discussion, and I request to all of you, please participate. So banker customer relationship part third. Clear? So basically debtor creditor. So here banker is a debtor and banker is a creditor. Clear? So there are two different cases. Clear? In one case, basically bank is a debtor, and in another case, basically bank is a creditor. Clear? So debtor creditor. Clear? So here basically bank is a debtor and customer is a creditor. Clear? And customer is a creditor, bank is a debtor. Clear? So basically when a customer deposits money basically with his bank. Clear? So basically when a customer basically deposits money with his bank, the customer becomes a lender. Clear? Like basically in the case of the deposit, the money is the money is basically belongs from the customer. So basically, and customer basically deposits his money basically with the bank. So in that case, clear? So basically when a customer basically deposits money with his bank, the customer becomes a lender and the bank becomes a borrower. Clear? So in that case, basically the customer basically becomes a lender and the bank basically becomes a borrower. So the money handed over to the bank basically it is a debt. Clear? The money handed over to the debt over to the bank basically it is a debt, and the relationship basically between the banker and the customer is that of a debtor and a creditor. Clear? So in that case, the relationship basically between the banker and the customer basically it is that of a debtor and a creditor. Clear? So what is the features? Clear? So what are the features of this relationship? Clear? So just you have to remember that. Clear? Basically when the bank is a debtor and the customer is a creditor, basically in the case of the deposit. Clear? In the case of the deposit, because the money is basically belongs from the customer, so in that case basically the customer it is a creditor because the customer is giving the money to the bank. Clear? And the bank is a debtor. Clear? Because they have to return back the money basically along with the interest. Clear? If they are depositing basically in the saving account or basically in the form of the fixed deposit, so they have to return the money. Clear? So basically in that case basically they have to return the money basically along with the interest. Clear? So take care regarding these things. Clear? Basically while answering the question what they are asking. Clear? So now let's discuss some features of this relationship. That is, the money is lent to the bank and the bank is free to use it basically in a most beneficial, in a way basically most beneficial to it. Clear? And the further the bank is not bound to keep such money intact. Clear? The bank will use basically that money like basically for the loan purpose. Clear? So it is not bound to return the notes and coins of the same denomination basically as it is deposited. Clear? Like it is not like that. Clear? If any customer basically it is depositing that the 10 rupee notes or basically 2000 rupee notes. Clear? So that they have to return it basically in the same way. Clear? So it is not like that, but they have to return the money. Clear? Whatever the customer deposit, not there is any compulsory of the same denomination. Clear? Next one is demand of payment. Clear? Basically demand of payment basically should be made by the customer. The banker is not required to repay the debt voluntarily, unlike basically in the case of a commercial debt. Clear? So basically if the customer basically wants to withdraw their money, so basically they have to come with either with the withdrawal form or the check, or basically through the ATM basically they can withdraw. Clear? So basically the bank will not pay the money basically voluntarily. Clear? And further, demand basically earlier basically at the time basically when CBS basically does not exist, so demand should be made at the branch basically where the account exists. Clear? So at that time basically where basically when the CBS basically is not existing, that the demand should be made basically at the branch. Clear? Demand should be made basically at the branch where the account exists. Clear? Except in the case of the drafts, traveler checks, ATM or credit card, etc. Clear? The bank is not required to make the payment to the customer. Clear? Except in the case of the draft, traveler's checks or ATM or credit card, etc. Clear? The bank is not required to make the payment basically to the customer. elsewhere at other centers. Clear? Although all the branches of the bank are constituents of the same bank. Clear? Although all the branches of a bank are constituents of the same bank. Clear? Although all the branches of the bank basically are constituents of the same bank. Clear? Because earlier basically this is the line clear that the demand should be made at the branch basically where the account exists. This is the like basically earlier time basically when the CPS is not exist. Clear? Even if presently also basically at the other branches. Clear? Basically where your account is not maintained. Clear? Or branches basically other branches. Clear? Except your home branch. Clear? There is a limit on the withdrawal also. Clear? In some banks basically there is a 25,000 limit, there is a 50,000 limit, or there is a 1 lakh limit. Clear? So it depends bank to bank. Further, and that basically we are discussing under the debtor creditor. Clear? That is bank is a debtor. Clear? That the bank has to return the money to the customer. Next one, that is the demand should be made in a proper manner. Clear? The demand should be made in a proper manner. Very, very important. And I request to all of you, please go through these points properly. Clear? The demand should be made in a proper manner. The customer should demand payment, not verbally or by mere telephone call. Clear? The customer should demand payment, not verbally or by mere telephone call. Clear? Basically, but by the check, draft, withdrawal form, order, or otherwise. Clear? So how they can withdraw the money? They basically either by the check, by the draft, withdrawal form, order, or otherwise. Clear? Further, demand should be made basically during the working days. Clear? Demand should be made basically during the working days and working hours. Under section 25 and 65 of the Negotiable Instrument Act 1881 respectively. Clear? Further, basically demand should be made during the working days and working hours under section 25 and 65 of the Negotiable Instrument Act 1881 respectively. Clear? So you have to check that. Clear? That is demand should be made basically on the working days. That is basically section 25 of the Negotiable Instrument Act, and working hours. Section 65 of the Negotiable Instrument Act. Clear? Like sometimes basically customer basically withdrawing the money even after the time. Clear? So basically they are asking, that is basically you have to give the money. Clear? I have urgency. So basically you have to follow the rules and regulations basically even at that time also. Clear? And rest basically it depends upon case to case as per to branch. But you have to have knowledge regarding all these terms. Clear? But you have knowledge, once have knowledge regarding all these terminologies. Clear? Now move to the next one, that is for the monies deposited, the creditor customer does not call for any security basically from the debtor as in the case of the commercial debt. Clear? So basically for the money is deposited, the credit that the customer does not call for any security basically from the bank as in the case of the commercial debt. Clear? Commercial debt basically it is a different case. Clear? Next one is in the case of the deposit accounts repayable on demand. Clear? That is basically repayable on demand. The law of limitation basically does not begin to run until demand has been made for repayment. Clear? The law of limitation basically does not begin to run until demand has been made for repayment. Clear? And in the case of the fixed deposit, clear, that is basically payment is to be demand basically after a specified time. Clear? In most of the cases. Clear? So in the case of the fixed deposit, normally the deposit receipt basically must be produced on or after the due date of the deposit, and the production of receipt basically it is in the nature of the demand. Clear? So basically in the case of the fixed deposit, basically normally the deposit receipt must be produced. Clear? In the case of fixed deposit, basically normally the deposit receipt basically must be produced on or after the due date of the deposit. Clear? On or after the due date of the deposit, and the production of receipt. Clear? Basically, and the production of receipt basically is in the nature of the demand. Clear? And the production of receipt basically it is in the nature of the demand, and hence the law of limitation. Clear? And hence the law of limitation begins basically to run from the date basically on which the receipt is produced. Clear? On which the receipt is produced. Clear? So what is the law of limitation? Basically we have to discuss in the LRA. Be clear regarding that. Just here one thing basically you have to remember, that this one is the important point, and basically when the bank is a debtor and the customer is a creditor basically in the case of the deposit. Clear? In the case of the deposit. Clear? And now basically next point arises basically when the bank is a creditor. Clear? So in which case basically the bank is a creditor and the customer is a debtor. That is second one, that is this is the second case basically which we have to discuss now, that the bank is a creditor and the customer is a debtor. That is basically when the bank lends money, that is in the case of the loan. Clear? That is basically when the bank lends money basically to the customer. Clear? Basically when the bank lends money basically to the customer is the borrower. Clear? So in that case, basically the customer is the borrower and the bank is the lender. Clear? That is basically loan or advance. Clear? So basically when the bank lends money basically to the customer, so the customer is the borrower and the bank is the lender. Clear? The customer is the borrower and the bank is the lender. Clear? And the relationship basically between the banker and the customer. Clear? So in that case, the relationship basically between the banker and the customer basically is therefore that of a creditor and a debtor. Clear? The relationship basically between the banker and the customer is therefore basically that of a creditor and the debtor. Clear? That of the creditor and the debtor. So this is the basically discussion of the creditor and debtor. So please remember both these points. Clear? So basically bank can act both as the creditor and the debtor, and the customer can also act both basically either as the creditor and the debtor. Now move to the next one, that is basically bank as a trustee. Clear? That is bank acts as a trustee. So basically if a customer keeps a certain valuables or securities, clear, basically with the bank. Clear? If a customer basically keeps certain valuables or securities basically with the bank for safekeeping, clear, or deposits basically in a certain amount of money basically for a specific purpose. Clear? So the banker basically, besides becoming a belly, it is also becomes a trustee. Clear? Basically it is also becomes a trustee. Clear? Like basically in the case of the locker. Clear? Belly baller relationship. Clear? Which we have, I think that is basically belly baller. Clear? So we have to discuss. Clear? So basically here they are saying that basically if a customer basically keeps certain valuables or securities, clear, basically with the bank basically for safekeeping, clear, basically for safekeeping or deposits in a certain amount of money, clear, basically for a specific purpose. The banker basically, besides becoming a belly, basically it is also becomes a trustee. Clear? Basically it is also becomes a trustee. So in the case of Subramaniam Pillai, why I am discussing a case, because sometimes basically in the examination basically they are directly asking, clear, Subramaniam Pillai versus other, clear, and others, clear, versus Pillai Central Bank Limited. This is the case basically as per bank as a trustee. Clear? So sometimes this type of question. Clear? So in the case of Subramaniam Pillai and others versus Pillai Central Bank Limited, certain persons basically deposited rupees 2,000 each in the bank as a guarantee money basically to purchase the cars. Clear? So basically how much basically they are paying, that is basically rupees 2,000 each. Clear? Basically in the bank as a guarantee fees basically for purchasing the cars. Clear? Like basically in the lucky draw. Clear? Basically they have to put their applications. Clear? Basically they have to put their applications. Clear? So basically in the end, clear, basically some applications are accepted and others are not. Clear? So basically the bank failed before they could get the vehicle. Clear? The bank failed basically before they could get the vehicle. Clear? So even they are not getting the vehicle, clear, or basically there are applications are to be passed but are not finalized. Clear? So basically the bank failed. Now bank says that basically I have no money basically to return. Clear? So now here the court was of the view that the bank should act as a trustee. Clear? So here basically what the bank should act, the bank should act as a trustee, and that the money basically should be refunded basically from the bank asset on the basis of the preferential debts. Clear? So and the money basically it is to be refunded, clear, basically from the customer, and that is to basically get basically from the bank assets. Clear? On the basis of preferential debts. Clear? And here further basically a trustee holds money or assets and performs certain functions. Clear? A trustee basically holds money or assets and performs certain functions basically for the benefit of other persons called beneficiary. Clear? Here basically a trustee basically holds money or assets and performs certain functions. Clear? Basically a trustee holds money or assets and perform certain function basically for what? Basically for the benefit of other persons known as to be beneficiary. Clear? Basically for the benefit of other persons that are to be called as the beneficiary. Clear? So in another case, a customer basically remitted money, clear, basically with the instructions to purchase shares and stocks of a company. The bank bought shares basically in parts. Clear? So in that case, basically the bank bought shares basically in parts, and before the completing the rest of the purchase, basically it failed. Clear? And before completing the complete purchase, clear, the bank failed here. Clear? So here the bank will fail. So what will happen? So it was held that the bank stood in the position of a trustee to the remitter and was entitled to refund of the unspent balance of amount. Clear? So basically in the case of the trustee, clear, basically in the case of the trustee, the bank has to refund the amount. Clear? Unspent balance of the amount. Clear? The bank has to be refunded. Clear? So this is the form of the trustee. Clear? So bank can act also as the trustee. Clear? So till now, basically we have discussed that is bank as a debtor, bank as a creditor, and third one that is bank as a trustee. Clear? Now move to the next one, that is belly biller relationship. Very, very important. This is the most important for the examination point of view. Clear? That is belly biller. So basically here bank act as a belly and the customer act as a biller. Like in the case of the locker. Clear? Bank is act as a belly and the customer is act as a biller. Clear? So basically when the customer basically deposits certain valuables, bonds, securities or other documents basically with the bank for their safe custody. Clear? So the bank decides becoming the trustee. As basically we have discussed earlier. Clear? Basically it also becomes as a belly and the customer basically it is becomes as the biller. Clear? So the bank basically becoming as a, besides becoming as a trustee, it also becomes as a belly and the customer here becomes as the biller. Clear? And the customer is the biller. Clear? So according to the terms of section 148 of the Indian Contract Act 1872, clear? According to the terms of section 148 of the Indian Contract Act 1872, the bank becomes custodian of the securities of the customer. Clear? So basically as per the section 148 of the Indian Contract Act 1872, that basically banks becomes custodian of the securities of the customer and hence as a belly. Clear? Basically and hence as a belly. Clear? And after becoming that, basically the bank is liable. Clear? And hence as a belly and it is liable basically for any loss caused to the biller basically due to the negligence. Clear? Basically due to the negligence of the organization or of the bank. So the finder of the goods are lost. Clear? The finder of lost goods. Clear? If the goods are to be lost and the finder of goods lost. Clear? As per the section 71 of the Indian Contract. Clear? Basically should return any increase in the goods or animals basically to the true owner. Clear? Any increase in goods or animals basically to the true owner. Clear? So under section 164 of the Indian Contract Act 1872, the finder has to take care of such goods basically as a ordinary prudent man. Clear? As a ordinary prudent man. Clear? So these are some of the basic guidelines regarding that. So basically these are the examples of belly biller relationship. And in the examination, basically what is the important point they will ask in the examination? That is basically bank either act as a belly or bank as either act as a biller. Clear? Just you have to remember these things. Clear? And as the section basically 148 of the Indian Contract 1872, basically the banks becomes custodian of the securities of the customer. Clear? And acts as a belly and due to the act, hence as a belly is liable basically for any loss caused to the biller basically due to the negligence. Clear? So one question basically from my side basically to all of you, basically what is the difference between the locker and the safe? Clear? Like basically you are keeping some your documents basically with the bank. Clear? And the bank will know basically it is what is present in that polythene. Clear? Or basically in that envelope. Clear? And basically in the case of the locker, basically bank does not know anything regarding that. Clear? Basically what the customer had kept in the locker. Clear? So these are some of the basic difference between these things. So now move to the next one. Agent principal relationship. Clear? That is the agent principal relationship. Clear? So bank it is act as an agent and the customer here it is act as the principal. Clear? That is agent principal relationship. Clear? So basically where it is act. Clear? So one of the ancillary services clear rendered by the bank is the remittances. Clear? That is the remittances of the money, collection of checks, bills, etc. Clear? On behalf of the customers. Clear? So one of the ancillary services basically rendered by the bank basically it is a remittance, collection of checks, bills, etc. Clear? On behalf of the customers. So it further undertakes basically to pay regularly electricity bills, telephone bills, insurance premium, club fees, etc. Clear? So it further undertakes to pay basically regularly electricity bills, telephone bills, insurance premium, club fees, etc. Clear? So in all such cases, clear? Basically in all such cases, the bank acts as an agent. Clear? Basically in all such cases, basically the bank acts as an agent and his principal basically being the customer. Clear? Basically principal being the customer. Clear? So as per the instruction basically given from the principal or basically customer, the bank has to do the work. Clear? So in all such cases, basically the bank acts as an agent and his principal basically being the customer. So the relationship of agency basically however terminates. Clear? That is basically the relationship basically between the customer and the bank basically terminates on the death, insolvency and lunacy of the customer. Clear? Or on the completion of the work assigned. Clear? Basically on the Death, insolvency, or lunacy? Please tell what is the meaning of that lunacy. Clear, of the customer or on the completion of the work assigned. Clear, or on the completion of the work assigned. Clear. So this is the, just you have to remember that basically that the customer basically act as a principal and the bank is act as an agent. In the case of the basically services rendered by the bank, like remittances, collection of checks, bills, etc. Clear, for all these types of the services. Now next one, that is a lesser and lessee. Clear. Now next one, that is lesser and the lessee. Clear. Bank acts as a lesser and the customer acts as a lessee. Clear. Lesser and the lessee, basically bank acts as a lesser and the customer basically as a lessee. Clear. So the bank provides safe deposit lockers. Clear. The safe deposit locker basically to the customers who hire them on a lease basis. Clear. I have already discussed that is bailee and bailer. Clear. So basically here basically not, that is basically for the valuable bond securities, that is basically in the case bailee bailer, and for the locker. Clear. Basically for the locker, that is specifically word, that is lesser and lessee. Clear. Basically for the locker, this one is a specific, that is lesser and the lessee. Clear. So there are the different things. Clear. Basically please remember that. Clear. For safekeeping. Clear. For safekeeping it is a different thing. Clear. Safekeeping and locker basically it is a different thing. Clear. Just you have to remember these things. What is the basic difference? Clear. Even in some cases basically you will treat like basically safekeeping of the documents. Clear. That is basically in the locker also. Clear. But technically basically it is all different things. Clear. Basically for the safe custody. Clear. Basically in the case of the safe custody, the bank will know. Clear. Basically what the customer basically will kept in that. Clear. Basically the bank will know basically what the customer basically will kept in that. Clear. And for the locker, the bank will not know. Clear. So the bank provides basically safe deposit lockers to the customer who hire them basically on lease basis. Clear. Who hire them basically on the lease basis. Clear. So the relationship therefore basically is that of the lesser and the lessee. Clear. So in the case of the locker, the relationship between lesser and the lessee. Clear. So that is the bank is the lesser, that is basically providing the services, and the customer is the lessee, that is basically getting the services. Clear. So in certain banks basically this relationship basically it is also termed as the licensor and the licensee. Clear. So in certain banks basically this relationship basically it is also termed as a licensor and the licensee. Clear. The bank leases out the space basically for the use of the clients. Clear. So and further basically the bank is not responsible basically for any loss that arises basically to the lessee basically in this form of transaction, except due to the negligence of that bank. Clear. Only in which case basically the bank is liable, basically in the case of the negligence basically the bank is liable. In all other cases the bank is not liable basically for any loss to the customer. Clear. In all other cases basically the bank is not liable basically to the customer. Clear. So please tell fast up to this much point basically it is clear to all of you or not, regarding all these different relationships basically between the customer and the bank. Now the last one basically which we have to discuss, that is indemnifier and indemnified. Clear. Indemnified. So that is basically indemnifier and indemnified. Clear. So here basically bank is acting as indemnified. We have to discuss this also in the LRAB in detail. Clear. In the module D. Clear. We have to discuss these terminologies basically in complete detail. Clear. Indemnifier and indemnified. Clear. So bank is indemnified or indemnity holder and the customer is indemnified. Clear. That is protection is given to them. Clear. We can say that. In that basically one person basically promises that basically he will protect the another one. Clear. So basically a contract by which basically one party promises. Clear. Basically a contract basically by which one party promises to save the other basically from the loss caused to him by the conduct of the promiser himself or the conduct of any other person. It is called the contract of indemnity. Clear. Basically it is called the contract of indemnity. That is basically a contract by which, clear, basically one person or one party basically promises to save the other. Clear. Basically from where, or basically from which thing, basically from the loss caused to him. Clear. Either by the conduct of the promiser himself. Clear. That the person who promised basically either by the conduct of the promiser himself or the conduct of any other person. Clear. Basically it is called the contract of indemnity. Clear. And that is basically mentioned under the section 124 of the Indian Contract Act 1872. Clear. Under the Contract Act basically of Indian Contract Act 1872. And in the case of the banking, clear, basically in the case of the banking, this relationship basically happens in transactions of issue of duplicate demand draft. Clear. This relationship basically happens basically like we can say that basically we will take the indemnity basically letter, or we can say that basically we have signed the indemnity letter basically from the customer. Clear. Like basically customer's fixed deposit is lost. Now the customer basically demand new fixed deposit. Clear? So basically we will take the indemnity letter basically from the customer that in case basically that fixed deposit basically the customer basically finds. Clear? And two fixed deposits basically arises basically of the same number. So in that case basically the customer is responsible. Clear? So basically in the case of banking basically this relationship happens basically in the transactions of issue of duplicate demand draft, fixed deposit receipt, etc. Clear? So the underlying point. Clear? So the underlying point basically in these cases is that either the party will compensate the other of any loss arising from the wrong or excess payment. Clear? So the underlying point basically in these cases is that either the party will compensate the other of any loss basically arising from the wrong or excess payment. Clear? Basically either the party basically will compensate the other basically of any loss arising from the wrong or excess payment. Clear? Basically arising from the wrong or excess payment. Clear? So these are the some basic discussions of the different types of the relationship basically between the customer and the banker. Clear? Basically between the banker and the customer. Clear? Hope it is clear to all of you. Clear? So if you any doubt, so please remember that basically for the locker that is lesser and lessee, and basically for the remittances service that is basically bank is act as an agent and the customer is the principal. Clear? That on the guidelines of the principal basically the bank will do the work. Clear? Bailee and biller that is basically for the certain valuable like bonds, securities or other documents with the bank, and that the bank will also know basically what they are kept in that. Clear? Basically what they are kept. Bank as a trustee also, and bank is a debtor creditor and customer is a debtor creditor. Clear? Both relationship basically we have discussed. Clear? So this leads to the completion of the topic. So thanks to all of you for joining this session. Hope it is clear to all of you. Basically all the recorded sessions and slides basically will be uploaded in your PPP group. Clear? So that you can do revision from that. So thanks to all of you for joining this session.